U.S. stocks ended lower on Tuesday, with the Dow dropping for a ninth straight session as investors showed caution ahead of the Federal Reserve's last policy meeting of the year. The Dow shed 0.6%, the S&P 500 lost 0.4%, and the Nasdaq dipped about 0.3%. Markets are pricing in a quarter-point interest rate cut from the central bank at the conclusion of its two-day policy meeting on Wednesday. Investors will also be looking for any signs from Chair Jerome Powell on how aggressive the Fed will be in cutting rates in 2025. Jimmy Lee is CEO of the Wealth Consulting Group.
I think the Fed's going to cut. Obviously, that's where the market is right now, that they're going to cut tomorrow. But I think it's a coin flip on a pause in January. And I think, again, as they've been saying this whole time, Powell's been saying how data dependent they are. It'll really depend on the reports that come out between now and the decision to make in January. But tomorrow, I'm fairly certain that the Fed will cut. If they didn't, it'd be a huge surprise to the marketplace. And I think that a lot of investors would potentially use that as an opportunity to create some selling and some opportunities for volatility.
Data on Tuesday showed U.S. retail sales increased more than expected in November, consistent with the economy's strong underlying momentum. Stocks on the move Tuesday included Tesla, up more than 3.5% after at least two brokerages hiked their price targets on the stock this week. Pfizer jumped more than 4.5% after the drug maker forecast 2025 profit roughly in line with Wall Street expectations. And it was another record day for Bitcoin, which briefly crossed $108,000 for the first time.
It was a long-awaited day for Kioxia. The Japanese chipmaker finally made its market debut on Wednesday after previous attempts at an IPO were aborted. Shares in the firm promptly rose around 6% from the open, valuing it at about $5.3 billion. Formerly the memory chip unit of Toshiba, Kioxia was bought in 2018 by a consortium led by US investment giant Bain Capital. At the time, the business was seen as a prized asset, but Wednesday's valuation is less than half what Bain paid to acquire it. Early plans for an IPO were derailed as the firm grappled with uncertain demand for chips. Then a move to merge Kioxia with US firm Western Digital had to be abandoned due to opposition from South Korea's SK Hynix, a big investor in the Japanese firm. Reuters then reported that another IPO plan had to be dropped this year after investors balked at the price demanded. Now some analysts still worry about Kioxia's prospects, with its memory chips not set to benefit much from the boom in AI products. Wednesday's IPO was welcome news for the Tokyo Stock Exchange, however. It added to a strong year for listings in Japan, which included a major sale by the Tokyo Metro rail system. In all, IPOs in the country have raised $6 billion so far in 2024, making it the best year since 2021. Nissan and Honda are planning an alliance. A Reuters source says the two firms are in talks to establish a joint holding company. That would allow them to share more resources as competition heats up in the auto industry. Nissan shares surged on the news, jumping more than 20% in early trade on Wednesday. Honda didn't fare so well, however, sliding around 3%. The talks were first reported by the Nikkei newspaper. An alliance would allow two of Japan's biggest automakers to cooperate over technology as the shift to electric vehicles reshapes the industry. It wasn't immediately clear whether a full union was the ultimate plan, though the Nikkei reports that merger talks were underway. On Tuesday, the two firms released identical statements saying that no merger had been announced, but they admitted to exploring various possibilities for future collaboration. Over the past year, an EV price war launched by Tesla and Chinese rival BYD has made it harder for other firms to make money on the zero-emission vehicles. The industry has also faced stalling demand for electric cars in the US and Europe, and Japan's big exporters all now face the looming prospect of sweeping tariffs under a new Trump administration. Any deal would be the industry's biggest since the $52 billion merger of Fiat Chrysler and PSA in 2021. Honda and Nissan have already deepened ties, agreeing earlier to work together on batteries and other technology. Nissan may be more in need of a helping hand, after saying last month that half-year earnings were down over 90%. Its market capitalization is about $10 billion after Wednesday's surge, or less than a quarter of
Bitcoin's
Honda's.
soaring value has caught the attention of high-end fashion brands and retailers. It's prompting moves to offer cryptocurrencies as a means of payment. That would help tap into fresh pockets of wealth and build loyalty with crypto investors. Until recently, only a handful of luxury brands, including LVMH, Gucci and Balenciaga, have experimented with crypto payment offers. But in recent weeks, upscale French luxury department store Printemps announced it was teaming up with the world's largest crypto exchange, Binance, and French financial tech company Lizzie to accept cryptocurrencies. It will include Bitcoin and Ethereum in its stores in France, and will become the first European department store to do so. Luxury lighter and pen maker St. Dupont told Reuters it aims to accept cryptocurrency payments in 2 Paris stores before the holidays. And cruise company Virgin Voyages began this month offering its first product accepting Bitcoin as a payment option. It's for a $120,000 annual pass for up to a year of sailing on its cruise ships. Regulators have long warned that cryptocurrencies like Bitcoin are high-risk assets with limited uses in the real world. High volatility has been another barrier to wide adoption as a means of payment. But support from US President-elect Donald Trump, who's expected to bring in more friendly e-currency regulation, have fueled record-breaking prices for Bitcoin. It topped $107,000 earlier this week. S&P analysts say the narrative is starting to shift. It's noting that blockchain innovation in financial markets could increase predictability for cryptocurrencies. Luxury labels have long sought to cater to affluent shoppers from the tech industry, and it comes as the luxury industry faces its biggest slump in years and searches for new sources of growth.